Thank you very much for the wonderful introduction. I'm very glad to be here today. BFSI is something I've been following with Amol for some time, and it has been a very good connection. I was wondering why I'm invited to this FinNext Summit. In fact, two questions came to my mind when Amol called me and said, can you be the keynote speaker? One thing is, of course, why me? Because now I'm not in the traditional, neither in the banking, nor in an NBFC, nor in a fintech, so why me? Secondly, why are we not discussing the future of banks? Is it that we have written off banks, that they are in the past? Or is it that we are very sure that there's a very strong future for banks? So now hearing Amol, I feel it is set that there is a future for banks. And banks, he mentioned that they are the underlying platform or underlying, the foundation for any growth in the financial sector. So that gives me a lot of optimism and a lot of validation for my being here. So I've been with SBI, then I've been with Indian Bank. So now I'm heading the National Securities Depository. So it's been a journey through banking, evolution of banking. And again, here I find the who's who of NBFC and fintechs. And so I would see how I can, translate my experience and whatever learnings I had in all these decades to what is happening in the environment today. I think there's a lot of relevance of what we went through. People do learn from other people's mistakes, I hope. And I think we should look at the legacy of the banks, legacy of NBFCs. There's fintechs yet to develop that legacy, so they are too recent and very fast and nimble to still have that kind of a footprint. But I think without condescension, without judging, let us look at the experience of these institutions and the context in which they were functioning at that time. And I really like that Amol mentioned about how, my experience of working in SBI, various transfers, through life changes. So yes, I think one more aspect which I would also, even if I forget during my talk, I would like to say diversity, inclusion, having more women in this room, in your companies, I think is something that would also diversify the risk and bring much more value to your companies. So I like the topics that have been discussed, that have been put on the agenda. I like the thing about why all roads lead to credit. Because ultimately, wherever I worked, I found that even in SBI or Indian Bank, we would value the credit skills a lot. Today, it is probably changing to digital skills, but credit seems to be the underlying principle of any financial institution, and ultimately there is money to make in credit, there is risk assessment, there is due diligence, what all Amol mentioned. And those are the values and those are the skills that will see us through the good times or the bad times. We were preparing for, a decade back or 2 decades back, whenever, once in a while, we would come out of our, branches or our cocoons and start looking at what's happening in the environment, because we were preparing for a promotion test or a promotion interview and people would ask questions. So the one question that everyone expected, and it actually came, was, there is so much banking that is happening without banks. Banks are being disintermediated, there are NBFCs, there are fintechs, so what is the future of banking? And no one will cut the branch on which they are sitting. So we would say, no, banks are very essential, and without banks there is no future, and there is, all that fractional reserve system, banks multiply money and we lend, and so we are very, very essential, and we got through. But I think that question really came up very seriously when NBFCs started taking a very active role. And while banks have their own strengths, I think the basic strength of a bank, which even today probably is not challenged, is the trust that people have in the banking system. Whether it's public, previously it was public sector versus private sector, there was some arbitrage, but now I think the entire banking system commands a kind of a respect and a trust. Whatever happens, there are a lot of scandals, there are a lot of NPA, there were a lot of NPAs, But still, the banking system never faced any run on its, for its, on its branches. So I think that trust, maybe partly because of government ownership, partly also because of the regulatory, intense regulation around banks, but there is a trust. The second thing I think which would be surprising to you too, if I say that the strength of a bank today or even through the years has been the operational resilience. You can, as an independent outsider, if you just examine the journey of the banks, they have survived, they have, some have really thrived, both again, public sector, I don't make any distinction because there have been major banks in the public sector which have really reinvented themselves, and now on the digital front also, while collaborating with fintechs and NBFCs, they still are investing in their own digital platforms and giving a good competition to the new and agile fintechs. So I think there's a lot that goes for the banking sector, but definitely there was a need and there was a gap that the banking sector left, which NBFCs filled in through that last mile connectivity, through their niche products, whether it was for housing, whether it was for motor finance. We have the heads of the NBFCs today discussing the future of NBFCs. I think that was a felt need. And in the beginning, the banks were a bit threatened, but very soon we understood that there's a need for collaboration. And BFCs were also dependent on the banks and the capital markets for their funding. Not all of them were deposit taking. So there was a kind of a symbiotic arrangement. Though I think probably the regulatory arbitrage or the kind of space that the NBFC was working in, some of those NBFCs really grew larger than life, and we have those case studies of ILFS or DHFL, which actually, brought in a lot more intense scrutiny on the NBFCs, and to some extent, the playing field was leveled. And I think then came in the fintechs. Now the fintechs, if you, in Mumbai, we would all hear of the Parsis coming to India and how they really, got into the stream by making themselves very acceptable to the ruler. They said that, yes, if the glass of milk is full, we will be the sugar in the glass of milk, which will sweeten the milk without adding to the volume or spilling it over. I think fintechs have brought in that kind of agility, that kind of lubrication, that kind of smoothness to the whole process. There are still a lot of operational friction. There is still a lot of inefficiencies in the system, but I think the fintechs have been looking at these. I've been meeting some of the fintechs and I'm very glad to really learn from them. There is so much happening in the space and there is so much focus on the consumer. I think that is the biggest positive of any finance organization. So when everything is going well, what is it that can threaten our future, or what are the opportunities that are there for us in this new environment? I think when it comes to especially the new age fintechs or the NBFCs, the growth has been quite fast and furious, if I can say that. And the network effects, what is driving the valuations or what is driving the business? Is it the consumer driving the business, or are we driving the consumer to do more business with us, which Amol mentioned in his talk also? I think these are questions that we will have to dwell on because the felt need of the customer, as he also mentioned, that whether it is agri-tech or insure-tech or wealth-tech, or I think there are many, many areas in the country which need this kind of a thinking. Are we scratching only the periphery? Are we looking at the low-hanging fruit and creating more and more need of a generation of millennials who are already highly leveraged? We used to talk of the twin balance sheet problem of banks or the companies, and now you will have a million balance sheet problem if we leverage the youngsters of this country. There should be some, I'm sure regulation will step in because, the one aspect I was mentioning to one of the colleagues was that as long as FPI investment or FDI investment came into the country, there was foreign money, there were institutional money, they were expected to know their risk reward. They were expected to do their due diligence, and the government and the regulator were probably happy with just laying down the policy because it was for them to assess their risk and their rewards. But when it is retail investors who come into the market and they take the positions on the companies, it's a different ball game altogether. The government or the regulator would not be as, sort of hands-off. Because when it is the individual investor, when it is our own citizen of the country who is aggrieved, and social media is a great platform, it's also a very dangerous platform when it comes to complaints and investor grievances and all. So there would be a lot more intense scrutiny. I was reading somewhere yesterday that yes, a regulation is expected to let that sector grow to a certain level, then step in with regulation. What they do, I'm quoting from a book, I don't remember the author's name, but it says Life After Google. And this, he says that when something is, the outlook of the regulator is, or the government is, when something is moving, tax it. If it continues moving, regulate it. And if it stops, then subsidize it. So there is a life cycle for this. So I think we might be in the second part today. We saw with crypto. I think this is something that we need to be prepared for. The intense regulation, the government looking at all these policies, and we need not feel any sort of impatience about all these things. This is part of life. In the financial sector, we all have faced regulators across the globe and everywhere. Let me tell you, US is no better. In fact, if at all, it is much more fragmented regulation. You'll have to handle at least 7 or 8 regulators if you're operating in the US. Here, at least, there are only 1 or 2. So I think this is a given, and we need to be prepared for it. The other thing I feel is that the convergence is coming in, whether it is banks, NBFCs, or fintechs. The realization and it is actually enlightened self-interest. Without these channels, neither the banks nor the NBFCs nor the fintechs can really thrive by not partnering with each other. There's only one way to go, and that is collaboration. And that is coming in the way in co-lending. I saw one item that being discussed tomorrow or today evening is on the co-lending platform. There was a lot of problem with banks and NBFCs in the co-lending. And that was because of one bank, one NBFC sort of a setup, whereas we should have a matrix system. And then the government is coming with that open network for digital commerce, ONDC. It is coming up with the OCEN, that open credit enablement. All these open platforms, I think, would be the new UPI for lending. And there is a lot of information floating around. There is a lot of scope for all the players. The pie is so small that all we have to do is enlarge the pie rather than fight for a share of the existing pie. And let me tell you, coming from the capital market side now, so far I've been in the banking side, I find that this integration between capital markets and banking side would in fact, throw open a lot more opportunities. We need to work on that side. From the NSDL side, we have been asking or we have been requesting for a single demat account for all the financial assets of an investor. If he can see his bank deposits and also his other wealth investments in one place, and there is enough capability on the depository side to build this. We have recently built a platform, digital, distributed ledger, technology-based platform for the covenant monitoring for bonds. And this has been working well. It's a test, it's a pilot case. But I think that DLT is coming in a big way. I don't know much about cryptos and how those will play out, but the underlying technology, I feel, is something that we should use to the maximum to actually improve the trust level and improve the coordination among the various players. The other risks that I see in the system today, Amol has already talked about some of these. If you don't mind, I'll just have some water. So when it is such a huge network, and such a strong network, we all get carried away by the network effects. But any such chain is as strong as its weakest link. And there are too many links in this entire chain. You know, the mightiest bank or the biggest NBFC, the very well-established fintech, but there will be some outsourced vendor, or there will be some employee or some area where even your eyes off for one day, I think would again lead to a situation where everyone is grappling to close the gap. That is one thing I would like to highlight. Cybersecurity, we all know, we all keep talking about it all the time. And I think the other one is taking care of our people. What I find in the new system, when I talk of public sector, I forgot mentioning that one of the strengths of the public sector, I think, is its people. And this would also come as a surprise to you, because there's a perception that quality is not so great and all that. But you know, I've worked all through, and we've done transformation projects with the same people, and the commitment and the kind of work culture that is there, I think has to be, there are no ESOPs, there are no big paychecks, but it works. I think that also we need to look at, you can't always be, looking at the next best thing. It's not that I don't want the employees to get a better deal, but what is their focus on the job at hand today if you are looking for a job all the time? I think there should be some thinking on this aspect. How do we retain, how do we enthuse people? The organization structure itself can become a risk. The more layered, this happened with those big conglomerates where banks could not understand the complex structures that they weaved. I think none of the new fintechs or NBFCs should get into a place where it becomes too complex for the promoters or anyone to handle or to understand. Nothing should be complex. No finance is complex. We need to simplify, and we need to make sure we do only things we understand. And that understanding, I think, is very important. The next advice I would give as a senior in the system is, please avoid that hubris. Have someone in your team, a close friend or your spouse or your partner, whoever, to pull you back to reality. You know, metaverse and all is fine, but I think ultimately we should have our feet on the ground and, our eyes on the ball. I've been seeing too many intelligent people, very capable people, losing it all because of either greed or hubris or both combined, which is a deadly combination. I request and I suggest that we have this ethical, compass to guide us properly. With that, I think I would thank ETBFSI for giving me this opportunity, and for all of you for listening so patiently. Hope it was useful. Thank you very much.